Let's go. Welcome back to
Yeah.
the Rollup TV. Today is Tuesday, September 2nd. We are live. Good to see you guys. Fun weekend, Labor Day weekend. Hope you guys had a good weekend. And some shenanigans happened over the weekend. Let's talk about it. What's up, Rob? How you doing, man?
What is going on, brother? Happy Labor Day. It's good to see you back. Ready for another banger week. Tons of shenanigans happening all across the board. Gavin Newsom's launching a meme coin. We're going to be talking about that and more on today's show. Andy, what kind of shenanigans did you get into over the holiday weekend?
Looks like Metaplanet bought some Bitcoin. I just surfed a ton. And is it Metaplanet or Microplanet?
It is MicroStrategy and Metaplanet.
Yeah, that's what I thought. Dude, so Metaplanet looked like they added some Bitcoin. Strategy bought 4,000. Metaplanet buys another 1,000. I was surfing. I was hanging out. I did some work. Yeah, I mean, these guys keep buying Bitcoin. Bitcoin bounced at 109, bottom on Thread Guy's stream. The tier list. Late cycle shenanigans for sure there. Sol showing some strength. Thread Guy bottom pump.fun. CT75. It's pretty funny yesterday. Yeah, definitely some late cycle vibes.
Anything that you would have done differently on the CT75?
Oh, I mean, they snubbed a bunch of the OG technical analysis traders and such. It's so hard to make these tier lists. I mean, we have practice on it with different like RWA companies, different like projects. It's so hard to rate people A to D. And then like people are mad because they're in the D tier, but like they're on the list. So that's kind of how I thought about it. But I just thought it was funny. I thought it was funny that it would mark the low as like there's nothing else to talk about other than making a tier list for crypto Twitter.
Crypto Twitter has its own cultural phenomenons. It has like this entire reality TV show like experience. It's got a whole cast of characters and people tune into it. And you're right. Like typically when there's things going on, it's almost like commentating. But when there's nothing else going on, it commentates on itself. And that's when it creates like this like introspective look into what CT is.
Yeah.
Which is a little bit self-serving, and it's a little bit like, all right, what are we really doing here? Shouldn't we all get back to work and like keep kind of like trying to shepherd this technology outward?
Yeah, but I mean, it's just a big high school vibe, which is funny to watch from the outside. So maybe we'll make the 75 to 150 list. Hopefully, shout out to Thread if you're watching. Snub me on the first one. Yeah, I mean, gold is ripping too. I mean, I don't really know exactly why, but I think it's because maybe we're lowering rates into an inflationary environment already at 3%. So I think Bitcoin should follow. Yeah, I mean, gold looks crazy strong. It's funny, like the gold that I sold, like when I sold crypto last cycle and bought gold, that thing has doubled. And has been zero headache, whereas like this rental property is a massive headache and is definitely not doubled. Should have put more into gold.
Yeah, I mean, Bitcoin and gold obviously share a lot of the same properties as far as like a safe haven asset when it's behaving that way. But generally, just if the denominator is going to zero, Bitcoin and gold are both great numerators.
Yeah, I mean, yeah.
It just makes sense. Like if you're structurally bullish on the denominator going to zero, you don't have to go all in one or the other. Like the Peter Schiffs of the world versus the Bitcoin maxis of the world, like probably you can break out a little bit and probably get some decent exposure.
I mean, I remember Arthur Hayes in the bear market last time wrote gold to 5K, Bitcoin at 250. Kind of looks like it's happening.
That's playing out. Another thing that is playing out is, the strategy qualifying for the S&P 500. This is something that I had brought up a couple of streams ago, and I stand corrected because I was of the understanding that MicroStrategy was not profitable, and that was a requirement in order for them to go and be listed on the S&P. It turns out here are the criteria for a company being listed on the S&P. It needs a U.S. listing on a stock exchange. It obviously has that. Market capitalization above $8.2 billion. It far exceeds that. Daily trading volume exceeding 250,000 shares. it beat that in Q2, and more than 50% public float. It has that. And here was the piece: positive earnings both in the latest quarter and on a trailing 12-month basis. And so they haven't been profitable or positive earnings for several quarters in a row. I was under the understanding they needed 3 straight quarters. But it turns out it's just 1 quarter, and then the trailing 12-month basis. They had 24 billion in net income in 2025, and they had 12 billion just in the last quarter. And so they had positive earnings in the last quarter, meaning that they now check every box when it comes to being included in the S&P. And so I think that would be a major news moment. This is obviously something that is going to show up in the mainstream news, CNBC, if and when it happens.
Yep. It means that everybody will have exposure to Bitcoin if they own any sort of index. Well, if they own the S&P, which, I mean, 95% of retirement funds, I would say, that are like somewhat that accept some risk, own the S&P 500, which means your mom, your cousin, your grandma, they're going to be owning the S&P 500. They're going to be owning Bitcoin through MicroStrategy. Let's talk about the guests. Today we have Aya and 𝘗𝘂𝘠𝘕 talking about institutional DeFi. Lots to cover there. We've got Intern, we've got Kevin from Monad, and we've got Cozy from Premia. Some OGs, some institutional presences today. Yeah, guys, let's get them up. And we will have our first conversation today with the kind of just orienting around, I think, institutional DeFi, what's happening RWAs. I posted a chart yesterday. It's absolutely going parabolic now. It's been on a really steady linear rise. Now it's going parabolic. Stablecoin growth is really increasing. Private credit's increasing. Institutions are coming on chain to use DeFi in with the DATs to get yield. So yeah, we got Aya and we have 𝘗𝘂𝘠𝘕 up. So we were gonna bring them up. And yeah, Rob, let's
just like
another breath of kind of what the institutions are thinking, what the ETFs are going on, the regulatory environment, kind of how some of these institutions are thinking about allocating. Today, I saw the Alibaba guy, Jack Ma, I believe is his name.
𝘗𝘂𝘠𝘕 is he's just being kind, but he's blind legally. So
he added 10 million or 10,000 units of Ethereum. So they have bought a ton of Ethereum as well. We've got them up here. We're gonna get Aya and 𝘗𝘂𝘠𝘕 up, and we're gonna be talking about what their view is on the state of the institutional DeFi paradigm today. So without any further ado, let's get Aya and 𝘗𝘂𝘠𝘕 up. Guys, welcome to the stream. Good to have you guys.
Yeah, likewise.
Thanks for having us.
It's a busy time out there. Hope you guys had a good Labor Day weekend.
Yeah. We were hoping for a quiet August, but that was not the case, was it, 𝘗𝘂𝘠𝘕?
No, it doesn't feel like a summer at all. It's been getting wall crossed on DATs all summer and weekends.
Yeah, man. So I've been spending quite a bit of time out here with a friend who runs pretty prominent VC in the space, and just kind of like seeing how he was working through August, and knowing that August is like a really slow month on the institutional side. Him and I were just kind of talking about what some of the larger investors on Wall Street, some of these Ethereum DAT investors, et cetera, are going to be doing now that September's here. And our theory, and we spoke with the framework guys last week, we basically have came to that there's going to be just a massive pickup in activity on the DAT side, on the ETFs, on the institutional flows. How are you guys thinking about this? And what are you guys seeing? And maybe first, we haven't gotten an intro, so I would just love to know, first time on the show, guys, quick intro, and then I'd love to just jump in as to what you guys think the next couple weeks of September have in store on the institutional side after a not so sleepy August. Aya, maybe you can go first, and then 𝘗𝘂𝘠𝘕𝘠𝘠, guys, thanks for joining.
Sounds good. Yeah, thanks again for having both of us. Having worked with 𝘗𝘂𝘠𝘕 in the space for such a long time, it's always great to be able to trade industry notes on a call like this. So appreciate you both for hosting. My quick background: so have been in the space for a bit, formerly part of the Pantera team, and then part of the founding team of FalconX, a CeFi prime broker, which 𝘱𝘭𝘕 will also speak to, and now co-founder and co-CEO of August and Upshift. August is our institutional prime business for DeFi and CeFi, and Upshift is our yield platform. And as it pertains to August and September, I will mirror what 𝘱𝘭𝘕 said in that, August was not the slow month we were expecting. There's kind of two divides that I would take this, and 𝘱𝘭𝘕 has a lot of more context on this, so I'd love to get his thoughts too. But the feedback we've gotten is everyone has a limited attention span, so you can only send so many DATs and so many of these digital, these treasury-like products to the same type of roadshows before people start to look for different yield opportunities. And it certainly feels like we might be at the tail end of that trend. And so while it has been a very busy August, I think the next question is, what's the next yield product for September to kick us off with? There's that. And then there's also, the conference kickoff that crypto tends to see with Token 2049 really kicking off the circuit. And so, that tends to also jumpstart a lot of the conversations on the product and partnership side too.
Yeah, just to step in there. So yeah, thanks for having me. But I'm 𝘱𝘭𝘕. I used to run a hedge fund called Ledger Prime, like a multi-strategy hedge fund. And then subsequently started another firm called Arbor Markets, which was acquired by FalconX. And my current fund, Monarch, which is rebranded to Monarch from Eminency, and is a relaunch of Ledger Prime, was also majority acquired by FalconX. So basically, we're an asset management firm to multi-strategy, largely crypto-focused fund, although more recently we've been doing a lot more traditional crypto-related equities. Yeah, and I just echo what Aya says. Definitely in August, July, August, extremely busy on these DATs. For us, we invest, and so we do a lot of due diligence on them, and a lot of that due diligence happens on weekends when you get wall crossed on these vehicles. And then subsequently, we also manage the treasuries for a handful of these DATs as well. And so post deal execution, as you're accumulating these assets or hitting the ATM and doing subsequent shelves, will help them accumulate more, right? And so it's been kind of two prongs there, which has kept us pretty busy. And yeah, I would say sitting in New York and in the US, it certainly felt like the DAT trade has been going on for a long time. But at the same time, I think abroad, especially on Asia, they've been a bit slower in the pickup, especially at the founding stages. And we're starting to see some of the later DATs that are ongoing now actually being predominantly Asian capital, just because they were kind of left out or weren't on the original ones to begin with. There's like an Athena one, Solana one. So a lot of Asian capital actually flowing in now to these later ones. And so, there's been a big exhaustion from the US side, but I think globally there's still a lot of capital and attention that can be harvested for these vehicles.
When you're describing sort of the later nature of these DATs, how do you reconcile this in terms of the investability, right? Like the sustainability of these treasury companies. Is there general macro policies or any sort of liquidity conditions, any sort of drivers that you can point to outside of the DAT structure itself that can show you, okay, this is sustainable, or no, this is something that it's really just piggybacking and it's copying these other formats? What are some of the drivers that you look at that are going to indicate to you this is something that's sustainable and this is something that still has some legs to it versus the alternative?
Yeah, I think it's definitely case by case, right? I think one is the shell, right? If you're going to do a pipe, like how clean is the shell? Is there like a dirty legacy business? Is there a lot of warrants and converts associated with it that can make the stock harder to trade later down the line? Is there like a lot of liquidity actually in the stock already? And then obviously the coming in, like the management team, right? Like that's a lot of this is kind of like a marketing game, and how do you grab the attention of the public markets? And you need someone that can bridge the gap between crypto and institutions, right? And I think Tom Lee and 𝘵𝘬𝘦 has done a great job of that. But some of the other vehicles that are less known and whatnot, I think have had a tougher time, right? And so there's a lot of different factors, right? And obviously, Bitcoin and Ethereum, I think, are large enough and well known enough to sustain many vehicles, right? But some of the other tokens, lesser known tokens, that are lesser known in the traditional institutional world, I think it's going to be hard for them to sustain, 2, 3, 4 vehicles, right? And so that's going to be, I think, a problem down the line. So it is, case by case, ecosystem by ecosystem, for us in terms of how we analyze it.
I had anything to add there?
Yeah, I mean, I would just really anchor on the attention piece, because how many Bitcoin and ETH treasuries could possibly exist out there, and it's not unique to DATs per se. It's for any product that is either first to market or has a very marketable name to it, like bullish, that really speaks to the retail Robinhood trading crowd. And so it is very much a marketing game. And, to 𝘱𝘭𝘕's point, there are some organizations that have done a tremendous job of it. And then there's others that, maybe have marketed themselves really well. But all of the factors that 𝘱𝘭𝘕 just mentioned are very poor on the back end: management team, structuring. And unfortunately, I'm sure those will have a much shorter lifespan, because not everyone is good at managing money. And it works well when prices are up and to the right. But if we do have a lot of volatility come up, I think it'll be very interesting to see how these play out, given who the manager is across each of these structures.
Yeah, I think one of the things that is most interesting from our perspective, and I think a lot of our audience, is around the actual using of specifically Ethereum and also Solana in their respective ecosystems to generate yield and to provide basically more ways to keep the MNAV higher, than keep the premium kind of rolling, right? Robbie and I got our start in early 2020. We were some of the first on 𝘗𝘂, on Compound. We were very much in the trenches, so have a good feel for yield farming and just kind of generating yield. I'm curious, when you're speaking with your prime brokerage business or on Upshift, kind of how you're thinking about providing these offerings to either these DATCos, ETFs. Kind of like what interest are you seeing? Is there a specific way in which these institutions need to operate on chain? How are you kind of seeing this play out?
Yeah. First off, it's good to know you were in the DeFi blue chip summer. That was a fun one.
Yeah.
Definitely
You as
couldn't get off your phone. Yes, that was a good
Sweet.
one. That was wild. Those 𝘗𝑒𝑎r days were good days. But I would say, look, a couple things need to happen. The first is, we in crypto like to say that the institutions have been coming for a while. 𝘱𝘭𝘕 dared me to compare this to the Paul Revere, the British are coming quote, but we've been saying it for a really long time. And, the reason they haven't been able to come just yet is because we're still, we're still getting NAV and reporting organized to a way that, someone can easily review what an APY looks like without having to, click through a number of different wallets and, compare different Excel spreadsheets. So that's the first. The second is Oracle redundancy, smart contract security and underwriting. And then the last I would say is security, right? And I think this is where we built our business coming out of the FTX days, where we wanted to have a more secure DeFi ecosystem that allows you to do CeFi-like trading, but with all the tools and provisions that CeFi extends into DeFi. And so when you have these kind of treasuries set up, you typically have them structured as SMAs. You have different managers. You want to control exactly how they trade, where they trade. And today, that doesn't really exist on chain. And so that's a gap that we've been able to fill. But it is, still a very long road. I think it takes time to get people warmed up to, trading on chain, having it be, fully transparent. And then also just the operational lift. We're still not there yet where you can one-click DeFi trade, unfortunately. And that's just because the technology is, very, very difficult. It changes every single day. And you just, new chains pop up, new dApps pop up, new loops pop up, yield changes. And protocols are managing for that.
Yeah. 𝘱𝘭𝘓𝘂, do you have anything to add there? Maybe with regards to what some of your institutional clients' appetite is?
Yeah, I think, we've always been very active in DeFi, and I think that's been our edge to a certain extent, right? I think we're a smaller fund, less regulated than some of the traditional players, and so I've always been able to access DeFi directly. I would say, broadly, regulation held back DeFi access to a certain extent, as well as infrastructure. I think, regulation is broadly getting lifted now, right? And whether you want to call this era of deregulation, regulatory clarity, it does open the floodgates to just increasing, competition and mind share and access. And so I think, generally, the blocker isn't now just purely regulation. It's actually infrastructure, right? It's I think people underestimate how much infrastructure has actually been built in DeFi, and then also for traditional institutions, how slowly they actually move as well. And so even if they could and wanted to, I think it does take just a tremendous amount of lift to integrate with all the different platforms, service all the different customers if they want to touch DeFi, and something as simple as cross collateralization of assets and portfolios between CeFi assets, traditional assets, on-chain assets. While it sounds simple and kind of the ultimate North Star, it's pretty hard to set up, right? And that's something that firms like August and Upshift are building. But for traditional firms, right, it's extremely difficult. And one example of something that we're actually working on right now with some of the traditional bankers and shell entities is how do we bring yield-bearing products to the traditional world, right? Right now, absent of going directly, and touching DeFi themselves, which some firms still can't for KYC or AML and regulatory purposes. They can do it through an SPV or they can do it through a total return swap, be a income passback method. Both aren't really elegant. It's cumbersome. So something that we're actually trying and borrowing from the DAT world is, maybe there's a way to use depository receipts, right? And RDC is a firm that basically can bring depository receipts from a qualified custodian, basically turn any yield-bearing token into a DR that can be held in now traditional rails like a PB. And just by acting as a holding vehicle, you actually get a yield-bearing depository receipt that can also be traded and used as collateral in the traditional world and rails of traditional PBs, and using that as collateral to trade stocks and bonds and everything else, right? And there's a bit of lift there as well in terms of getting the necessary liquidity and prime brokers comfortable with yield-bearing tokens. But that's one way of how do we bring, I guess, merge the two worlds. And if we can't quickly bring, CeFi to DeFi, maybe we bring DeFi to CeFi, right? So, those are some examples.
The original vision here was that, we would all run our own validators. We would all verify the chain ourselves, right? I remember when I first opened up a wallet back in those DeFi blue chip days, I had to run a full node at the same time just to own a wallet. But what we're starting to get to is more of this institutional foothold in owning pieces of these networks. And so I'm curious where this end game develops, maybe on like, a sort of a midterm time horizon, as we're increasingly seeing that retail does not want to run their own node. They don't even really want to know that they're using crypto. We're going to start to see institutional, institutions take a greater foothold in these networks. And so I'm curious, when you kind of forecast this out, and Bitmine owns 5% of the Ethereum supply, and SharpLink owns another 3 or 4%, and Michael Saylor and MicroStrategy own, a larger percent of the Bitcoin supply. Would you guys say does this pose a systemic risk to these networks, or can it become kind of this funnel and this outlet for the greater population to engage with the network from a more secure, more convenient place?
Ooh, 𝘱𝘭𝘓𝘂, I'll let you take that one first. Totally have thoughts.
Yeah, I mean, I think there's like two. One is like, is this all in the spirit of what crypto originally like represented?
I don't know, man. Is it?
It's kind of like, like the whole like original like Bitcoin saying like not your keys, not your coin, but like it's clearly not. But it is what will bring ultimate mass adoption. At least, so you can think of it in terms of like stages, right? Having institutions hold their own keys and custody and everything probably is a heavy lift, or just the average retail even. And so I would like to think that we will progress. We are progressing to the stage where it is more centralization and mass adoption, and getting everyone comfortable and using the rails and exchanging and everything. And there will be some point, after that where, now that everyone is onboarded, it doesn't mean that like, 5% is a lot, but at the same time, it's not even close to the majority, right? And so I think there is a world where, bifurcated world where you have like the institutions and it's very centralized, but you still have kind of the self-serving, individualistic kind of world that crypto originally represented, and I don't see why the two can't coexist.
Yeah, I would just say, I think relative to how much Bitcoin some of the OG holders already own, we've already reached, some concerns around centralization, and so. To 𝘱𝘭𝘓𝘂's point, I don't think these large institutions pose any net new risk that didn't already exist in the kind of pre-mass institutional stage. I would say the risk that it does pose is, volatility and price risk. If any one of these players takes on large leverage and gets liquidated, that brings us back to a kind of Black Friday event that we've seen in the past. That will require centralized stopgaps again to kind of save the industry. And so I actually think, I tend to sit in the camp where centralization, there's definitely some benefits to it, but also, August was born out of FTX, and there is definitely limitations to, how good centralization can be. And a lot of it is, people taking on significant risk without knowing how to underwrite that risk. And we're actually seeing that happen again. And even if you think about what was the trading experience like when you all traded in 2020, over the last 5 years, I can't say that the experience has gotten that much better, unfortunately. And it's just because the technology is really hard. And I think people undersell just how long it takes to build a seamless user experience on, fully open code. And that then leads to people wanting to cut corners. And unfortunately, I think what we've seen is in 2020, when we started the business, we had a lot of requests for risk mitigated features. And now we're actually seeing a lot of requests for people to cut those corners and be able to do things in a much more seamless way with less checks and balances in place. And, I think the only thing that keeps that in check is just large black swan events, unfortunately. And so, will we have another one? Yes, always. Ideally it doesn't happen from one of these large institutions that's holding, 4 or 5% of any specific asset, whether it's Bitcoin, ETH, or any of these other altcoins. But it's bound to happen, whether it's one of these centralized parties or an exchange or some other large 3AC like hedge fund. It's going to happen again.
Yeah. I mean, I think if we think about some of the larger risks for the current bull run, I mean, I think obviously there's like the macro factors, something like inflation going up too high, these types of things. But I think there's also like now these systemic kind of DATs that our people are kind of worried about. But it does seem like there's a bit more of there's a lot more concern with what is actually happening publicly now, likely as a result of like PTSD from previous cycles, but also just that this has been so public. So from my perspective, it's almost like, well, if everyone's already clearly stating that this is going to be risky and that this could cause problems, then perhaps it's less likely to actually really play out in that way. But I'm not sure if you guys have seen this in Chile. I'm super curious from your perspective. I know that you're deep in the DAT land. Like, has the DAT structures gone from like where they originally started, which was like more of like, I think if I'm not mistaken, more of like pipes, then they brought pipes in at the monies, then they've kind of, have they gone more and more riskier, like almost like a senior tranche all the way to like a junior tranche to kind of try to get more yield, try to get more premium? Like, are you seeing the risk tolerance go up? Like, for example, there was rumors of Tom Lee buying call options instead of buying spot Ethereum. Right now, I'm not going to say that those are substantiated, but the question is kind of like, is that process gradually happening? Because if it is, then I think we may have that kind of black swan as Ilya or as Aya presented, at least as a possibility.
Yeah, I like to think that the buy and call strategy as actually just smart execution.
All right, we got a DJ on our hands here.
He's an option trader. So just keep that in mind.
It's definitely happening. Not saying 𝘗𝘓𝘦 is doing it, but it's definitely happening across the space.
Okay. As like a hedge or as like a way to get more upside, or both?
As a way to get more upside.
Oh boy.
Right? Like one way to structure it is, if you're going to buy a certain token, and you think you're going to, ultimately drive the token higher, like you can buy a call option ahead of it, right? As one way to kind of like amass additional tokens and get additional leverage, because like ultimately, if it finishes in the money, you exercise and then you basically buy the tokens at a lower strike as long as spot is above it, right? I think it would get dangerous if they were selling options on leverage, right? I think like that's where firms ultimately blow up, right? If you're buying, your downside is kind of just a premium spent. But if you're like ultimately, selling options eventually on leverage for yield, because ultimately the MNAV premiums for all these vehicles are going to deflate out, right? And I think the majority of them will trade at par or at a discount, right? And maybe the top ones in high growth, native yield generating tokens and their associated DATs, maybe they trade at like a 25 to 50% premium in the long term, right? I think the majority are going to deflate away, right? And so then to differentiate or to survive or generate additional revenue or cash flow to basically continue buying the underlying tokens, that they resort to esoteric yield generating strategies or things on leverage or basically running a fund, right? And they don't have the proper knowledge or expertise to do that and run these more sophisticated strategies.
Yeah.
Then they run the risk of obviously blowing up and ultimately bringing down the whole individual entity and obviously the space if multiple are doing it at the same time.
Yeah. Just a real quick follow up there, Rob. Just one last one.
Yeah.
September 19th, I believe, is a massive expirations date for options for Bitcoin and I believe for Ethereum. Shilling, maybe you can double check me on that if you're familiar. I'm just curious, like more in the short term here in September, what is the options market kind of telling you from like an IV perspective or just from a risk parameter perspective?
Yeah, I mean, there's a few events, right? Like even this week, there's been a bit of vol premium to it. Right? I think there was an ISM today, and then there's employment data coming out on Friday. And then, those are kind of the drivers of, ultimately later on in the month for the Fed rate decision. So all that is getting priced into the options markets as events that can move the market. And so the options market is obviously pricing in, event vol for all these different events. And obviously the big one is the Fed funds decision later in the month, right? And even though it's priced in, I think, the not the amount and whether they actually cut or not. It's more about the Fed funds conference afterwards and how he presents, the ultimate rate cut and everything there, right? So the market is definitely pricing, more volatility in September than previously.
Nice. I got a couple quick ones before we let you go. One is that my understanding of these DATs is that the cost of setting them up occurs up front. And so to me, that says, okay, well, the longer that these companies survive, the less their operating expenditure is, if most of their costs occur up front and they're not recurring. And so is there a Lindy effect to these? Maybe SharpLink and MicroStrategy, they've been around for a long time. The newer ones that come up a little bit later aren't going to have as much time to sort of dilute those initial expenses. But some of the ones that, we saw start months ago, BitMine, SharpLink, or maybe, 3-4 months old, still relatively early, but have they had a chance to get through some of that initial expenditure? And now as we go longer and longer, they actually have a higher chance of survival?
Yeah, I would say, I don't think fees ultimately, it's kind of like fees and even yield to a certain extent. Like people talk about, okay, like, how do you generate yield in the assets, like 5%, 10%. Like that's not really going to move the needle for like whether these things survive. Like 5% yield, great. Like it's not going to like really bring an additional like retail capital to these vehicles, right? And same with fees. And there's ways to mitigate fees also. Like one is investment banking fees have come down tremendously in the past 3 months, right? From a lot of these vehicles to the asset management fees as well, in the past 3 months. And then there's ways to mitigate that, right? Like you have a 1-for-1 like staple warrant to these vehicles. A lot of these vehicles do this now is, the kind of baseline MNAV is like 1.2, so it's basically like 20% below. But like you just throw like either like discounted tokens into it, or you throw like a warrant on top of it, and basically that kind of just lowers the whole MNAV down to like 1, right? And it's kind of artificial, right? Because like the warrant's ultimately diluted and it's like a share dividend, but there's ways to kind of like mitigate that. It's important, right? And people should ask these questions: is management aligned? Like how much upfront fees there is and everything else. But I don't think that ultimately all of that drives the whether these things survive or not, right, in the long term.
Got it. And the other follow-up I had was that earlier we were talking about MicroStrategy now checking the boxes and meeting the criteria for the S&P. They have a decision later this month to take out some companies from the index, put some new companies in the index. One, do you think this happens either now or sometime in the near future? And two, if it happens, will we see some sort of on switch flip and see some liquidity rush in as these passive funds are accumulating the S&P? What do you think is the domino effect of bringing MicroStrategy or another one of these DATs into the S&P?
I think it's I hope so. I think it will get included. I think it will get included, and I certainly hope so. And a lot of the success of these vehicles has been on the volatility, right? And hopefully, at least in the short term, getting included in the S&P drives additional interest and price action and increased volatility, and so it enables MicroStrategy or anyone else to harvest that, right, and kind of generate additional yield and cash to accumulate additional tokens. And so I hope that happens. I think if it happens, it drives additional volatility, and ultimately it's good for DATs, it's good for tokens, and it's good for the space, at least in the short term.
Yeah, Aya, do you want to add anything there?
Yeah, again, like this all looks great as long as price is up and to the right. volatility is not always up and to the right. And so, as and I agree, I think it'll get included in the S&P 500, but that also means that you can, take on additional leverage. And, there is pretty large systemic risk in, the vol Bitcoin relative to, the structure that MicroStrategy has running. I think that in itself is kind of the black swan we don't love to talk about in the industry, but is very, very much there. And so, I think it's great for the space. It'll be hopefully good also for inclusion of non-US funds once it's in the S&P 500 as well, just on a marketing basis. But yeah, overall great for the space. I will say the one thing that we have seen is, to Xiaoling's earlier point, there hasn't been that much volatility and interesting yield opportunities in the last 2 months, and it'll be interesting to see if September kind of changes that around. But to take on significant risk to earn 5%, which is kind of the call it risk-free rate, doesn't necessarily make sense. And so, at some point, people will have to potentially offset, costs by going into more esoteric yield strategies. And that's again, like talking about risk, that's where the risk is, and whether people can manage that well. Yeah.
I just want to give you a chance to shoot your shot here. Where can people find you? Where can people use Upshift? Who are you looking for as we close out?
Yeah, of course. So we actually have Monarch as one of our curators on the Upshift platform. You can check us out at upshift.finance. I would say, a lot of what we focus on is, everything that we mentioned on the call today is mitigation of risk, right? And it's easy to look like, you guys know this well, coming from 2020, it's easy to look like you're a good trader when the market's doing well, and then really complex when you start to get that volatility. So as we do expect vol to increase in September, and Q3 tends to be a very volatile quarter for crypto in general, we definitely want to see, professional managers and curators manage that risk. So check us out.
Guys, thank you for joining us. It's been a pleasure. I find this meta of the conversation of the cycle to be relatively interesting as it's new information, but also kind of like, I don't know if it's as exciting as winding up algorithmic stablecoins on weird collateral or super crazy lending. But it is what we got this time around.
Look, all of that's going to be included in these DATs soon enough. So, it will converge. It will converge.
Yeah, Xiaoling, stay safe out there in those options territories, man. Burn me once, burn me twice. Shame on me, shame on you.
Thanks.
Yeah, thank you guys.
Thanks for joining, guys. We'll see you next time.
Thanks, guys.
See you soon.
Really appreciate it. See you.
Cheers. All right, Rob, what's your key takeaways here?
The leveraged yield farms integrating into the DATs, for better or for worse, that's my perspective. Like, we've seen that before. We'll see that again. We kind of know how that works out.
Yeah, look, I just think that makes me, that whole conversation just further makes me want, like, okay, look, I'm very bullish in the shorter term. Tom Lee's going to get 10 bill. He's going to rip this thing. He's going to put an ATM. He's going to issue convertible debt. There's going to be more DATs. People are going to be in action. Asia's getting in the market. But boy, oh boy, I'm going to be cash ready in the future. That's what I'm saying. $1 today is not the same value of risk to reward as $1 tomorrow post some of these happenings. So we got Kevin in the background. He's been waiting for a bit. Let's get him up. And yeah, maybe we can fill him in on some of that talk, because I feel like he's probably going to be interested in that as well. But yeah, Rob, that's my takeaway. It was like, all right, like full on, I think position strong, but my goodness, there's going to be some opportunities for those with powder in the future.
Yeah, we've seen it before. We know that rehypothecation, we know where that ends up, whether it occurs on chain or off chain. And these DATs are just another form of rehypothecation. One of the things that does give me a little bit of solace is that we keep hearing how slow moving these companies are, which to me means, okay, it's slow moving both ways. Slow moving to get into the market, and slow moving to get out of the market too, which could make for more, a more sustained drawdown when it ends up happening, when this leverage loop takes effect. But
Yeah.
We'll see it nonetheless.
Kevin,
we got
welcome
Kevin up
to the
now.
stream, man.
Mr.
GM,
Intern,
brother.
welcome.
What's going on?
Hello.
Excited
Look
to
at
be
that
here.
mic,
Andy,
dude.
your hair looks fantastic today, dude.
Thank you, man. That mic is something else, dude. Look at that.
You like this? It's got the
Yeah.
triple arm on it.
Dude, the blue light is solid too. Nice, man.
Hey, appreciate it. Yeah, we have this like little podcasting type room set up in the office. So every once in a while when people get excited about parallel EVM, I get to come in here and use this mic.
Yeah, man.
Well, we are excited.
Yeah, we are. Actually, dude, I'd like to I feel like you do a lot of conversations that aren't like super technical because people just want to see token. People just want to have the mainnet, yada yada. I mean, I spoke with James maybe 2 months ago on a pod in New York City for his first podcast. He's on a Twitter exodus right now, but that's okay. Man, I'm just curious, what are some of the latest technical developments that you guys have shipped leading up to mainnet? Like, what are some of the more intriguing experiments that you're either working on for the future or that are kind of in testnet ready to ship? Yeah.
That is a great question. It
wasn't on the question list. Sorry about that.
You're good. I don't even think I got any question list. So I think we're just going in blind. I would say that there are 3 to 4 technical updates that we will be announcing on Twitter over the next 2 weeks. And one of the rules on the growth team is like we will give a bunch of information about announcements that will go out, but you can't like take the announcement for your own personal account or growth. So unfortunately, I can't like drop the news now because then it takes all the wind out of the actual one that comes from the main account. But yeah, I'd say a high level is basically like there is a modded mainnet version, right? That's like finalized, complete, will work very well. And everything has just been getting to that level. And so like probably for the next 2 weeks, it's basically just getting the tech to the point where like it is mainnet ready. I'm also hearing like I can hear myself going through. I'm not sure if this is me or
Oh, really?
something.
I can.
Yeah, I can just turn. I'm just going to turn down my volume a little bit. That's fine.
Yeah.
So yeah, it's like getting to the point where it's complete, and that is in the near future. Once it's complete, then you ship mainnet, and then once you ship mainnet, then you start doing the bonus extra stuff on top. So James would be a great person to ask about the bonus extra stuff on top.
Cool.
I think that will be very exciting. He's been waiting years to start putting these in because, you know, his entire thing has been getting mainnet to, or getting modded to mainnet readiness. So you got to get to that point, and then anything above that's gravy. So
yeah,
that is what it looks like. I know I don't have a ton of specifics for you on that front, but if you turn on notifications for @monad, you will find out very soon in the next 2 weeks some of the technical updates that have come on.
Beautiful. There's the growth team working in action. Man, we just finished our nominations for the Monad cards. I think today's the day for the next round. Tell us about what comes next for that, how you guys came up with that idea. I think I saw you on Thread stream talking about it a bit. But we finished our nominations. I think the deadline basically just passed or is about to for those. Yeah, man, would love to get some insights if you can share this of what's to come.
Yeah, for sure. I mean, so I'll preface it by saying there's some stuff I definitely can share. Some stuff that will be revealed in the future. But yeah, Monad cards honestly was a brainchild of 𝘗𝘓𝗦𝗧𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 ideas, but ever since Monad Carts happened, now I just call him the master of ideas. He has more ideas of things to do than anyone I've ever met in my entire life. And the vast majority of them are like pretty terrible. And then like every once in a while he has one, it just completely changes the course of what Monad does and like how everyone perceives it. And so you got to just let him cook. Usually the steaks come out burnt. but every once in a while it's like Michelin star stuff. So shout out Tunes. This was definitely one that I think went really well. Just generally a personalized tribute to a lot of the people that like have contributed to crypto Twitter. I think everyone kind of, whether it's on purpose or not, like everyone kind of takes for granted that like we have this industry crypto that we care about, but there's also this like fun social layer to it. And it's like, if you imagine working in crypto and they're like crypto Twitter doesn't exist, like that's a pretty bleak place. Like if you have nowhere to share like the lows with, like crypto would be pretty brutal. And I think there's also just been so much, I mean, I'd just call it AI slop that has come over the timeline and kind of has been like poisoning this thing that we care about. It's harder and harder to tell if an account or a wallet is a real person on the internet. AI and automation generally just makes it harder to distinguish real people. And so this was an attempt to like manually go through and figure out who all the real people are that like make the space go round and just show a token of appreciation. Give some customized cards, like make the timeline fun for a day was really what we were hoping to do. And also just put Monad in front of everyone, given mainnet is on the horizon, kind of remind everyone what Monad is looking to bring to market, and yeah, hopefully spark some excitement.
Well, you guys certainly accomplished that. Really did take over the timeline. It was all good vibes too. Like you guys touched several communities and there was a positive reaction all around. I think maybe the only negativity was people who didn't get one and felt like they could. And then you guys included the nomination rounds after that. I'm curious how you guys see it, because you've been building for so long. You've seen ebbs and flows in the community that once you launch mainnet and you launch the token, the ebbs and flows are entirely dependent on the chart. And so you guys now have unique insight into, okay, there's ebbs and flows in the community that are irrespective of price. When you guys see that, how do you manage it? What is the code for community sentiment? Like pre-token, you guys are launching these campaigns. When you see it sort of in a valley, how do you reconcile with community sentiment in the growing phase?
Yeah. I'll preface it by saying I work at a foundation of a blockchain that has not launched yet and is going to in the future. So like, if I sound like I'm saying weird phrasing, just like roll with it.
Sure.
To kind of answer the question as directly as I can, I would say like, similar to what you would imagine in a post-mainnet world, I think Monad has actually gone through a number of cycles of attention and hype and excitement, and then kind of like dead periods where it wasn't, right? Like there will be times where Monad is over 50% of the Kaido TGE. Like it seems like it's the only thing that people are talking about on Twitter. And then it will go through months where it's kind of like, yeah, people are building and waiting for it to come out, but it's not the zeitgeist, right? The other things are happening that are more interesting to talk about than like the chain that they haven't gotten a tech update from in a month, right? And which is natural, and that's completely fine. But we've definitely seen our fair share of like, even starting in late 2023, I think kind of pre-initial or pre-fundraise, like there was this wave that took over crypto of like, oh, parallel EVM, like what is possible when this comes to market? And Monad was really the tip of the spear of all of the projects, or the general topic that like captured all of that attention. And so it was like this massive inpouring of attention, and everyone who had been there for a while got really excited, and like they felt validated in all their beliefs, and they started like posting how Monad's the greatest online. And then that lasts like 2 or 3 months, and then there's 6 months or so of kind of dead period or trough, and where like it seems like the attention generally is flowing out. And then we have testnet launch, and it's like all the attention flows back in. So it's a long way of saying like, yes, mainnet is not live, and like there are variables with that we haven't had before, but there's a lot of things that I think are very similar, and that like you understand when like excitement is high, this is generally how people act, and like when excitement is low, this is generally how people act and like the things that break or, so there's a lot of learnings from that. Look, it's nothing like the real thing.
Mhm.
I put out a tweet that was like kind of a joke earlier today, but like, I swear to God, my job has been talking about Monad, which is a product that isn't live for like close to 3 years. Like there is nobody that wants this thing live more than I do. I really can't wait for that. I think there's going to be a lot of good things. I think people will be more excited than they generally think right now around Monad launch.
Dude, I'm curious, as you've been through this, multiple year journey, the meta of mainnet and token and points and marketing, it has shifted so much. I mean, I put out the whole revenue meta thing like 3 months ago, and I got a lot of heat for it. But now that's the thing. It's like generate revenue. What's your L1's REV? How are you doing buybacks for the token? Back in early 24. Airdrops, stake your TIA for airdrops, stake this for that, get, farm that. And then it was points. So like, I'm curious, like, has your strategy, like you've been able to kind of watch a lot of this unfold, and now it feels like come to a point where you've kind of seen a lot of, for lack of a better word, like hot garbage happen as people experiment, for the better or for worse, right? We went through these different metas, for like launching token or for launching mainnet or for rewarding contributors, that type of thing. Obviously you can't answer the specifics on this, but just more broadly, like from your lens, how have you been watching this play out? And also, I'm sure, participating in it from Kaido, from these types of things. And then, how has that kind of third-party view been able to allow you to better optimize what you guys want to achieve with your launch and, with the general distribution of token or just distribution of marketing, et cetera?
Yeah, there have been a lot of learnings. Like we have had the benefit of watching an enormous number of projects with things that are comparable to Monad launch, right? And you learn something from all of them. Some of them you learn something and it makes you more optimistic. Some you learn something that makes you more pessimistic. But like every time a new one goes through the pipes, you're like, okay, this is what they did. This worked. This didn't work. I think that there's a lot of different how do I want to call it? There's a lot of different like layers in crypto metas, or like there's a lot of different layers in crypto, and they cycle it either faster or slower depending on the layer. And if I give you an example, maybe it'll make more sense. But like the topic of the day on crypto Twitter might last like literally 10 hours. Like maybe if it's the FOMC, it'll last like 2 hours. Like that's how long people talk about something. There's the meta of like points or like revenue. This on issues should last a lot longer. But like in general, like the rev or points or whatever people are talking about, like those tend to last like 3, maybe 6 months, depending on what it is. There's kind of like the and then there's kind of like the building a product. Like that time horizon tends to be like multi-year. And so when you have a multi-year time horizon, like foundation, right? So like working on Monad, trying to make sure that Monad is in the best position to succeed in the long term. And you're working with metas that are on the time horizon of months, or maybe topics that are on the time horizon of weeks, or trends that are like, on a single day. It can be very distracting. And I think my main learning has been honestly learning from 𝘗𝘠𝗦𝘧, like never get too tied up in the topics of the day or what people want to put onto you or the project. But also do not dismiss them. Like it's almost like kind of try to be a passive observer, and like when things come through that are true and are good ideas, like adopt them and use them. But generally you want to be building your strategy not from like, oh, we saw 2 or 3 people do this, that seems like a good playbook. Like typically if that is your thought process, you're going to make mistakes and you're going to do things that have bad outcomes. for yourself, for users, for kind of just everyone who touches the thing that you're working on. Generally just like following best practices. And then if you discover something, like inventing your own kind of meta or marketing scheme or community strategy, like that is going to lead to much better results. Like it kind of has to be reasoned from first principles. If you're copying others, you're going to end up just like washed, irrelevant, or like, just doing things that that don't really work.
Yeah, I mean, especially at this point.
Yeah. And so what you're describing is something that Andy and I have referred to as narrative market fit. Given that Monad's pre-product, and look, the Rollup can relate to this because we're effectively pre-product too. Like narrative market fit is our product market fit. They're one and the same. And so you see them pop up, like you're saying, some of them have different time horizons. You got to figure out which ones are valuable to fit into. And more often than not, the most valuable ones are the ones where you can create them yourselves. And so going through some of these ebbs and flows, you've seen and been exposed to certain narratives. I'm curious, which ones do you think are going to sustain, at least from now into like Monad's next chapter? Is there any narratives that stick out to you that you think are going to become particularly relevant? Or maybe you could just kind of paint the picture of like, okay, what does Monad's mainnet chapter look like? What kind of narratives are you trying to kind of permeate through and kind of tell the story of what Monad looks like in this next chapter?
Yeah, I would say there are a couple things that are going to remain true. And if these are not true a couple years from now, then like either we're in a really bad spot or crypto's not what I thought it was. But like in general, there are a few things that I think are fundamental and are relevant for Monad. One, I would say decentralization is important. Crypto is not going to just turn into a big Google sheet. Like fundamentally believe that. If that's incorrect, then like this industry is going to do very different things than I think a lot of people hope. Decentralization will be important. Speed, lowering latency, increasing bandwidth is important, will continue to be important. That is kind of the frontier of performance. People want cheap block space and EVM compatibility, or like more generally, just having the common standard and common language on top of performance is also valuable. I think that those things just are true. There are, I don't know, at this point, there's probably been like 10 different major metas that people then go, well, Monad's a thing. How do you fit into this? Right. And you can like either choose to spin it or not, or just like let it sit. Like, I feel like Andy and I probably see each other once every 6 months. And like, there's some other thing. He's like, how do you fit into this? I'm like, I don't know, dude. Like, you tell me. You guys had the pod. Like, you're probably better at understanding it than I am. But yeah, I think like there are fundamental things that are valuable to crypto, and generally those things don't take a very, they don't really take a leap of imagination to see, right? Like, oh, like low transaction costs. Yeah, that's pretty valuable. Like you can understand why that's something that you would want. Or like decentralization. Yeah, kind of a key component to crypto. Like it's certainly something that is important in the industry. Usually I think the more someone has to like convince you of like 4 or 5 different logic flows to get to this conclusion, the more it kind of like smells like you're getting tricked. I think that's the main thing for that. I think the reason Monad has been successful, like, yeah, maybe we've done some good things on the marketing front, or like had some funny tweets, but in general, it's like, hey, this thing is just actually pretty fundamentally valuable, and it's not that hard to see why, and so people gravitate towards that and they get excited.
Fast chain,
yeah, I think
chain,
that it's like the
cheap chain.
Yeah, fast,
lots
good,
of users,
decentralized, like low hardware requirements.
Yeah, just like the basics, right? The fundamentals, the true fundamentals.
Right, do the fundamentals really well, and people will build cool stuff in crypto. I think that's kind of always been the thesis.
Yeah, dude, I'm curious some of your key learnings working with CMS. I'm gonna get him on the show sometime in the next week or two. And I mean, I was following a lot of his stuff, his podcast. I think, did you guys have a podcast back in the day or something? Or he just did a lot of shows, I think. But I just remember you coming up in Twitter in that time. And obviously, you were kind of fresh, I think out of university probably. What were some of the, is there any really funny stories or takeaways or just like experiences that you can share with us that you may not share in a given, Monad podcast that are good, like personal life lessons or experiences or market lessons or risk management, just anything?
Yeah, I mean, I have a ton. And I've been like I probably put like one, like, oh, this is something from CMS days out per month on Twitter. I would say Dan has like the best for people that operate in like crazy smart space. Dan has like the best common sense of anyone that's there. I think he knows the areas where like he has good information and he knows the areas where he doesn't and is just like super okay with that. Like I remember in 2021, we are talking about NFTs and he's like, dude, I know nothing about this. I don't have the time to learn about it. But like, I'm sure if you're trading them, you can make a ridiculous amount of money. And I was like, this is the thing that everyone is doing in crypto. How do you just choose not to know? And it's like, because he just has his bread and butter of like just trading the majors. He understands the flows of capital. And that's like where all his alpha is. I think he has actually been trading crypto in size a lot longer than most people realize, and like probably a lot longer than like anyone else that is still on crypto Twitter. Like Dan was head of trading at like Circle Trade, which isn't even a thing anymore, but from like 2015 to 2018, I want to say. The guy has touched a lot of Bitcoin. Like he's moved a ridiculous amount of Bitcoins around the shared ledger. I think that just like learning from someone who's like been through it all and like also has really good common sense has been huge. I'm trying to think of like any specific
where were you guys when
learnings.
when Terra collapsed?
So
were you still with
I was
CMS
actually
then,
on
or?
a trip.
Okay.
Yeah, I was with CMS.
Okay.
I was on a trip to New York, but I lived in Boston at the time, like where the CMS guys are. Eric, shout out Eric, for like the 2 weeks leading up to it, kept talking about like, he's like, once this ratio gets hit, like USD has to collapse. He's like, it has to. And his ratio was like 1.5 to 1. I forget what it was, like total dollars in anchor versus total USD in circulation, something like that. He was watching it tightly though. He's like, once that happens, I know it's going to collapse. It got to like 1. It didn't quite hit his target, but around there, USD like started to depeg a tiny bit. And I remember this is a good Dan story actually. Dan was like, because we had loans. Dan was like, repay, like we're not getting liquidated. Like go and repay all your shit right now. And USD's like 99.5. And Eric's like, no, if I do this loop, like I'm gonna pull. Dan's like, I'm overriding whatever is in your brain. You don't get it. Like when shit goes crazy in crypto, everything explodes. You do not want to die. Like repay all your stuff right now. And so we did the trade, got out, and then like because of that, we actually ended up not getting liquidated. So like shout out Dan on the common sense side. But yeah, I was at CMS at the time. That was a crazy kind of thing to see. Yeah.
Yeah. Rob, I think you and I were in my parents' living room together when it started collapsing, like 94, 96. We were like, holy fuck, gotta get out of here. That was a yeah.
Yeah, I
That
think
was
we
a
were at
wild time.
your kitchen table, which served as the roll-up war room in
in
the early
Florida.
days. Yeah.
Last one for you, intern, before we let you go. What's your thoughts on Thread Guys tier list yesterday? Were you appropriately ranked? Were you too low?
You made it. Congrats.
Yeah. Who was too high? Who was too low? Who got snubbed?
Yeah, let me pull it up. I think I'm appropriately ranked. This is like, I'm a big golf guy, and I feel like there's like no one, like crypto golf overlap is so small, but there's this hilarious guy, 𝘗𝘳𝘵𝗦𝗧, who his entire thing is like, he doesn't try that hard. He's just on the PGA Tour. Like he's number 70 in the world. So I was like around there on the list. I'm like, somebody's got to be 70. Like, So I thought it was a good mindset. All right, looking at it. I mean, Rasmer and A-list is not.
That's crazy, right?
Gotta be lower. I don't know like 3 of the people in A. I'd move Mert up, like objectively. I think that has to be true. CL probably gets moved up because he is kind of OG and he doesn't really tweet about crypto that much anymore, but every once in a while. I'd probably move 𝘗𝘬𝘰 up. He's like pretty relevant again. Zach XBT can't be B list. Like he's.
I know, that's
be
what
higher.
I was thinking too. I just saw Zach. I was like, no way, dude.
Yeah, and I think he like generally left out all the facers. Like, there's no like Nick Carter in here, or like
or like Eric Wall is not on there.
Yeah.
right.
What about Frank 𝘐𝘬𝘠𝗏 as number 4?
So this is like, you gotta like, if you look at this through Thread Guy's lens, then
Yeah.
it all makes sense
For sure.
But like outside of Thread, it's like no, obviously Frank 𝘐𝘬𝘠𝗏 isn't the 4th guy on all of crypto Twitter. Like he left for like whatever months, and then he came back and was
last
like,
6
"Yo,
months.
anyone have TV recommendations?" I like 𝘗𝘳 up there. I'll say that. Like 𝘗𝘳 in S tier is a hot take, but I think that that's true. I think 𝘗𝘳 is one of the smartest guys out there.
Yeah, I met 𝘗𝘳 in Copenhagen a couple months back, and we were doing like mega ETH, based like vetting early stage mega ETH projects, and yeah, he's definitely looking how he can figure like analyzing these projects and trying to figure out, all right, how can I game this thing and yield farm the hell out of this thing? Like, how can I just maximize my output as a result of your mechanism? Just completely like, just straight mercenary, like capital allocator mentality.
Dude, he is like truly one of the best people in the world at that. I've seen him do it a few times, like just break down a concept. Like it's almost like the same way, like we read words as text on crypto Twitter of like, oh, this is how something works. And like he sees it as like a moving thing. He's like, oh, this is where the outflows don't match the inflows. Like spam, exploit. And it's like it's like unbelievable watching him do it live. I'm sure you're doing if you guys are looking at early stage projects.
Yeah.
But I think 𝘗𝘳 is like probably most underrated guy on crypto Twitter, in my opinion. And he's still highly rated, but like super smart. I would long 𝘗𝘳 if I possibly could. But yeah, look, I'm happy I made it. I wish that guy at least made me like C tier or something. But, you know, so someone's got to be in the D tier, and I'm happy to take that spot.
Yeah, I mean the whole concept of tier lists. I mean we've done them for projects before. We've done them for like different verticals and sectors. They stir so much controversy for just people's opinions, and then people are happy that they made it, but mad that they're on D tier. But it's just such a funny concept to just, I don't know, it just throws me into like crypto Twitter is a big frat type vibe.
Dude, it made me think of like Hot or Not, or like whatever Mark Zuckerberg's first app was, where it's like girls and he's comparing. It's like that's just this for guys, like to compare each other. But yeah, as a D-lister, I'm like, look, you're either on the list or you're not. That's kind of
that's exactly. That's your vibe there. All right, Kev. Well, man, appreciate your time. I know you're slammed. Mainnet, hopefully within a couple of weeks. Definitely before the end of the year. We're all praying. I think you're praying more than all of us. So we wish you the best. And honestly, man, it's just a new beginning, right? Like we've seen this. You know, you launch a token. A lot of people think it's the end game, but you know, obviously you'll have multiple years on vesting for personal allocations. You'll have multiple years to develop the product. Really takes a chain a whole year to even be judged, in my opinion. People are like, oh, abstract chain is terrible. It's like, dude, it's month 2. Or like, oh, this chain isn't doing anything. It's like, guys, it's the 4th month of it being live. So it's almost like a whole year. I think you guys will probably like, you know, accelerate that traction phase a bit more than most. But really, I think it's almost like a resetting of expectations and a resetting of a new beginning. Because that, you know, now the 10-year game starts. So yeah, man, looking forward to having you on more and more throughout that process, and also just being a part of the community once it's live.
Yeah, no, appreciate you having me on. And yeah, I think you hit the nail on the head, right? 𝘗𝘬𝘰, James, Eunice, some of the smartest people I've ever met. 𝘗𝘬𝘰, I'm pretty sure, is actually the #1 smartest guy I've ever met. Like, I don't know who's second.
Generational glaze, brother.
Yeah, I mean, like he is. Like, I don't know. You spend time with him, and it's like, yeah. But yeah, they spent, coming up on 4 years putting this together. They're not going to be done in 2 months. I think 𝘬𝘳𝘺 truly sees this as like, this is what he wants to build out indefinitely. And like, hell yeah. Like it's inspiring to get to work with people that like care that much about what they're doing. So yeah.
Yeah, I mean, I think
we'll see.
a lot of this kind of like what ICOBeast is calling it. I mean, Thread Guy calls it like tweet your way into a 6-figure job. ICOBeast has his own little like phrase for it, but a lot of, I think, what is required for that to be super successful from a personal financial perspective is betting on the right team. Because like obviously a salary is a salary, but a lot of the upside in crypto is the equity. And so I think that you've done a good job there, and hope, again, wish you the best. And yeah, man, have a good week.
Yeah, appreciate it. We'll talk to you guys soon.
All right, buddy.
Thank you.
Peace.
Thanks, Kevin.
Alrighty, Rob. What's your takeaways on Monad? Bullish, bearish, ready for mainnet? What's your thoughts?
It's almost like Monad has been around so long without really showing itself that it's difficult to box it and define it as anything. Like I think
it's more bullish that it hasn't launched yet, in that it didn't have to go through the high FDV, low float, negative 80% altcoin market that we've seen the last year, 18 months.
I think you just look at so many L1s and it's down and to the right. And so I think there are some of those L1s that will survive and they'll do well and they will reemerge.
Yeah.
But yeah, I think if they had launched anytime in the last 6 months, they would have seen the same
similar price action.
Yeah, the same result.
Yeah.
And so I think so many, like we were just saying, so many of these projects they launch and that's the exit. That's token generation. Either they sell OTC. I mean, how many times have we seen that? And so
I hope we get airdrop allocation from Monad cards, because our fund missed this one. I remember DMing 𝘬𝘳𝘺 like maybe almost 2 years ago and being like, yo, is there a KOL around? And he was like, nah, man, not gonna happen. And I was like, all righty, no worries.
I just think you can't box Monad in. I think when it launches, yeah, it's a blockchain, but you really don't even know what it's going to look like when it launches. Yeah. And so to put a price on it or kind of put together some preconceived notions about how it's going to go is just setting yourself up for failure. Because
I mean, I'm stoked on it though. I think it's going to do great. I think people have their own opinion, but it's going to bring more people on chain, in that community, like actively using the chain, and then that'll branch out. It's just more network effects for the entire space. We get too caught up in like ETH, Bitcoin, Sol. Like, guys, just own all of them if you want, and just ride the wave and like make the help the broader space get to adoption. But anyway, we got Cozy up here. I am super curious for his thoughts. Yeah, dude, let's do it. Yeah.
I think we're gonna get it Cozy up here in a moment. Yeah.
Hey, Cozy, one sec there, buddy. Sorry, just got to get your audio dialed. Let's get Cozy up here and make sure he's good to go. Thanks, guys. One sec. I think we're just loading up the setup here. I think you've got. Is that one of those? What are those?
Can we call that an avatar?
An avatar? Okay. All right. Cozy, just give us one quick sec here as we, yeah, but I mean, Rob, like, I think people have too much tribalism. They fight too much around different things, and here we are. So yeah, Cozy, welcome on. As I was saying, Bitcoin, ETH, Sol, a lot of us fight about these things, but I think you kind of made it from Ethereum, but probably see things a little differently now. What's your take on that?
On, and then Ethereum kind of became not my home because of me preferring that over Bitcoin. Like, it wasn't like me choosing a side and going like, oh, I align with Ethereum more. It was just that's where the things to do were, right? Like, there was no DeFi in Bitcoin. and all the ways to make money were on Ethereum. So we went there, and then Ethereum to me isn't just ETH, right? It's all the EVM compatible networks, because like I have this nation state theory when, you know, people choose their home, and that will be the network of their choice that they use the gas token, and that's kind of the token that they hold the most of. But whenever something new comes out, they will go and take a trip over there. They'll play the games, go to the new casinos, they win money, they lose money. And when they're done, they bring it all back home, right? Like if their home base is ETH, they go back to ETH. If their home base was Sol and they went over to base to go play around with the base stuff, they sell it all and they go back to Sol when they're done. And for me, like Ethereum isn't just Ethereum mainnet. It's Arbitrum, Optimism, Polygon, Phantom, like you name it, Base, will be Mega, you know, anything that's EVM compatible, people will take their trips to, which we all did during, you know, I think the DeFi renaissance, you could say. It didn't just happen on ETH mainnet. Things got expensive, just as they did when all the Sol people started talking about how expensive ETH is, and that's why they're trading there. The cycle before that, we did the same thing, and we went to Binance Smart Chain, we went to Polygon, we went to Phantom. We went anywhere where there were new DeFi protocols popping up that had yield opportunities. And there's no reason to, like, you know, choose one winner, right? Like there will always be a user base on each of these, no matter how big or small. And it's fine to pick a basket of winners, I think. So like owning Bitcoin, Ethereum, and Sol, because you see that they have the most attention gravity, or there's the most economic activity happening there. I don't think it's wrong to do that. And I give a lot of pushback to the Solana people because of how much hate Ethereum gets, but it's not that I hate Sol. Like I traded memes there. I've traded on the derivative platforms there. Like I was there when Mango did all their stuff, and I have Mango, you know, a Mango hat from back then and sold some. So like I've done plenty of stuff on Solana. It's more just in fun to push back because Ethereum has gotten so much hate over the last like 2.5 years. And I totally agree with you. There's no reason to like, you don't have to be right by owning one of them. Like you can own all of them and win. So it's always been silly to me that there's like so much tribalism again around, you know, these like core assets that everyone can hold and participate in. You don't have to choose a singular winner to make money.
It's funny too, coming from from the Bitcoin days when there was a lot of Bitcoin forks, and there was Bitcoin SV, and there's Bitcoin Cash. The whole thing was just denominated in Satoshis. Just get more Satoshis. And if you can do that, you know, by putting a trade on Bitcoin Cash or going on a yield farm in Ethereum, go do that, bring it back to Satoshis. And so this native asset portfolio that you're talking about, I think makes a lot of sense as we start to grow out.
Are you saying stablecoin denominated pairs ruined crypto trading?
I think it depends on like what your goal is, right? Because for some people, their goal is to like acquire more Bitcoin, right? And I think a lot of the people from the early days, that's why you always see people bring up the BTC XXX chart whenever someone's talking about how much something's up with, you know, I'll throw out a random shitter, okay, like Cosmos USD. I'm not gonna hate on Sol or ETH, but whenever you see, they'll put it against BTC chart and show how it's underperforming, right? Because the goal is to own and acquire more Bitcoin. And not financial advice, but like I'm of the opinion that Bitcoin will trend up against fiat forever on a long enough time scale because of the devaluation of fiat currencies, much like gold and other precious metals. So it's like, I understand the digital gold kind of narrative in that aspect, that just like gold is valued in a certain way as kind of like a form of mattress money that will always trend up on a long enough time scale. I think Bitcoin will too. So for some people, they're just trying to acquire more Bitcoin. And for other people, they're trying to just have more cash than they had when they came in. So for them, they're going to trade against the USD chart and be happy. They don't care about how it performed against BTC because they have more dollars than they had before they got there.
Yeah. 𝘗𝘳𝘕, what's your or curious, both you guys take, like, where, you know, are we like, where are we at in the market right now? Like, obviously we're all making money, but like, are we close to the end? Is there an end? Are we super cycling with like these weird new risk on periods, risk off periods?
𝘗𝘳𝘕 just told you that Bitcoin is trending up forever.
Well, that's what I mean. But like,
yeah, I mean, like on
how,
an infinite time scale, right? Like if you look out forever, if you really zoom out, I think it trends up forever. Because like, you look at gold, and when gold peaked a few years back at around $2,000, it then traded like back near like 1,000 for the last decade, and then it now just ran up super hard. So like there are plenty of people that bought the peak of that, and they were very unhappy, whereas other people bought it as an investment and didn't care. They were just trying to acquire more gold. And when you have that kind of mindset that this is digital gold, or this is going to, replace certain systems in the fiat world, then your time horizon is much more expanded than people trading the 1-minute chart. And whether you buy it at 100,000 or you bought it at 90,000, it doesn't matter to you. You bought it at 70,000 or 100,000, you don't care, because on a long enough time horizon, it's going to be valued more than it was today. So as far as like where we are in the cycle, I talk about this with Marty a lot, that this current kind of like institutional interest, as well as, I don't want to say meta, but change in perspective, where you have these DATs that are popping up, and Tom Lee cheerleading Ethereum on Wall Street, and everyone wanting to like get into ETH and BTC. It's a much different than it was last cycle or any of the cycles previous. And it really kind of throws my own strategy off, because I had a certain, not a price point, but I had a certain date range in which I was going to go kind of risk off. And now when you see large institutions shoving 8-9 figures monthly into Ethereum to bulk up their holdings, or shove into a treasury company, getting approvals for up to $1.5 billion to buy ETH for their treasury, it kind of throws that off a little bit, because it leaves you wondering, not that they know something you don't know, they're buying the same way that anyone else is, but I think there is a new, like the same type of traders that were able to control the market before, they don't really make an impact anymore. They may be able to they can do that on medium caps and small caps, but like, the guy with $1 million isn't moving the market the way that he was, 5 years ago.
Yeah. And what was that previous time frame that you had in mind?
End of this year, like November-ish, I was looking to kind of de-risk, and now I'm not so sure. We'll see when we get there, like what things are looking like in that other space, in the institutional space. And if they're still just as hungry and interested, and we still see people piling, buying $12,000 or 12,000 units of ETH over a course of 2 days to bulk up their treasury, well, we're in a different, we're in a different arena. I hate to use that term, but than we were, than I thought we would be in the beginning of the year or last year.
Yeah, no, I know. I mean, look, I feel like I still have a bit of like, all right, I know there's a good bit of upside to be had here, but I'm pretty satisfied with this cycle in terms of like how things have gone,
For sure.
and have started to clip some out, and definitely not going to get wrecked like I did in 21, round tripping 7 figs. That was a gut wrencher. But like at the same time, I just can't help but like keep thinking like, dude, I do not want to sell my coins to the institutions. I do not want to sell my coins to the institutions. Like this is like, but like in 2017, when Rob and I first joined, we would be in the library.
That's what we wanted to do.
We'd be like, holy shit, I'm gonna dump my coins in the institutions. But now it's like, it's just funny.
But
man.
they're coming heavy now. They're coming really heavy.
There's another reason to not sell. Like there's always a reason to not sell. You know what I mean?
That's the thing that grounds me, right? It's like, even if there is some like asymmetric information they have and why they're purchasing to hold, again, their time horizon could be much longer than mine is. Or it's that they're not trading, right? Like they're buying that to bulk up the treasury. They're going to keep buying. And like for a lot of us who don't have that type of capital to be buying thousands and thousands of ETH or, hundreds and hundreds of Bitcoin at a time, we're going to want to maximize the amount of Bitcoin and Ethereum or Sol that we can buy during the downtrend. So we will be looking for a time to exit for, a year or 2 years or so, and then start DCAing back in. Whereas a lot of those entities probably will not. So, you may sell to the institution still, right? And it's totally fine because you're going to be able to buy back at a lower price point than at the price that you sold. So You may still
hear
want
you.
to sell to the institutions.
No, I think I do. I think a little cushion of foundation outside of the market is going to be good for the mental.
Totally. Yeah, everyone should sell something, right? Like it blows my mind. You see people all day long and they're flexing their unrealized gains, but like I didn't even know that I tweeted this, but like the quotable crypto thing sent me a thing the other day, and it was like, it's not money until you take it out or something, or it's not money until it's in your account or something along those lines. And it's true. Like you'll feel immensely better if you have some cushion, if you eliminate your debt, if you change your life somewhat. Like you're not doing anything positive for yourself by just seeing a number go up on a screen. So like
100%.
Find the time that's right for you, or the portfolio value that's good for you to start shaving some out and clipping some out, and change your life a little bit. Like I tweeted it the other day, like the greatest thing I ever did was sell some crypto, buy a house, and stop spending as much time on X, right? I started focusing, put all my focus towards my work, my family, and my health. And work is taking up a lot of that now, but it's just a change in like where my focus is allocated to. And before it was a lot of shit posting and making sure to keep my eye on every single thing that was going on in the space, no matter how big or small, because I saw it as a profit opportunity. And what I came to realize after, I started working in the industry in 2017. So like after a handful of years of being in the industry, you realize that there are thousands of opportunities to make money and you only have one life. So do you want to spend your whole life just glued to the computer, or do you want to start being picky and choosy with the opportunities you take and enjoying life a little bit? And it was hard to make that transition, but over the last couple of years, I've been slowly starting to do that a little bit more. And I think it's probably the best thing for my mental health that I ever did.
Yeah, full unk mode. No wonder why you didn't make the thread guy tier top 75, man. You got snubbed.
Yeah, I mean, I don't scam anyone, and I am not online. I'm not terminally online like I used to be. So like, I see a lot of people upset they weren't on the list. Like I could care less. Like I like Thread Guy. I think he's one of I think he has I think his head is in the right space. He's had some bad influences around him in the past. But I think that like what he's doing, he's on the right path, and he's I don't want to say he's doing a good thing, but like he's doing well with what he's doing. And so I don't care if I'm on his list or not. Like I still respect him trying to make it in his own way.
Yeah, of course. Well, dude, let's talk about some. Yeah, go ahead, Rob.
Well, I just got a little bit of a different question. Like, you've been around the space for a long time. You have been able to protect your anonymity for that long. I'm curious, have you ever had pressures for you to like not be anonymous? Obviously, crypto gives you the space where, this is sort of a normal thing in our industry. It's very not normal when it comes to other industries. How have you been able to protect your anonymity for this long? And have you ever thought about doxing? Or like generally, what is your approach to privacy?
Okay, so this is a really good question because I'm not fully anonymous. There's plenty of people in the space that know my face, know my real name. They've come and visited me at my house, or I've flown out to them at their houses. I've been to their weddings, things like that. So I'm definitely on the pseudo anonymous more than fully anonymous. And I've had quite a few times when just like in different engagements where people have wanted me to dox. Like I did some podcasts not that long ago, and there was a lot of pushback about me using my avatar. And because for them, they're like, it builds trust for you to have your face and da-da-da. And I just said, look, listen, I've been using this avatar for years now. Most people know me on stream with this avatar. Everyone knows like Cozy as something with this like aesthetic. And the core thing is like, I don't care that like people in the industry that I work with know who I am. It's that I care that the people outside of the industry don't know who I am, because that's where the real danger is, right? Like the people that you're doing business with and that you're working with, like they're not really posing a significant risk to you and your well-being. But the guy that lives a mile away from you that is much worse off finds out that you sold some monkey JPEGs for a few $100,000, you're a pretty like juicy target for them, right? So that's more where I like to keep my identity, to myself, is I don't like to mix my crypto identity with my real identity to the people that aren't in the industry
Yeah.
and to the people that are just like fair weather industry people that I don't really associate with. Because
Mhm.
if you're just someone on Twitter, I don't know you. There's no like, I wouldn't ask you for your name and address, not you guys personally, but like anyone who's just on Twitter, like reply guying me, I wouldn't care to know their name and address and where they live. So it's none of their business of mine, or like their face. I don't care what they look like because like they're not a friend of mine and like I'm never going to do business with them. But the people that I get close with are the people that I, throw events with. They all know who I am and know my face and they can point me out in a lineup. So there are plenty of people, when it comes to like the trust aspect, that others could ask, like, is this him? And they would be able to say yes. Uh, it's more about protecting myself from the unknown outside of crypto than like the people that I do know and associate with in crypto. Like when
Yeah.
we turn this stream off, like I have no problem taking my avatar off and like talking to you guys face to face.
Yeah, I feel you.
That's not, yeah, you're not like the
I
people
mean,
I'm
we've
concerned about
met,
knowing.
obviously, right? So
Yeah, and we've met. So like, you're one of the people that knows. And I've thrown events with, like Unchef and like Redacted and Vertex, like all those people have seen my face and know who I am. So yeah, I think there's people oftentimes get it confused with like people wanting to hide from others in the industry, and it's not about that at all. It's about protecting your personal safety when you're in the real world, when you turn the camera and the computer off and you're going to do things just like in the places you live.
yeah, I agree. I mean, I have a pretty strong divide between my personal Instagram and my personal stuff than on like I'm not like Andy is not what my friends from high school know me as. You know what I mean? But obviously it's like face and everything's out here. But it's just like, yeah,
Damn. Okay.
you try to
Andy
keep
is not.
things.
Yeah, I didn't know that. I thought you were Andy.
Well, I mean,
That's cool though.
it is a
respect that.
short name. It is a shorter version of my real name, yes. But like, so you can put the pieces together. But it's not like, it's not like I go around showing off my Twitter account to like my neighbor. You know what I mean?
Yeah, for sure.
It exists in like this little bubble of the void of the internet, which a lot of normal people don't exactly exist in. So
yeah, when people like ask me what I do and I'm out, I just tell them I'm a consultant because like it's the most boring thing that like you could tell someone. And like I tell them I do business development and I do consulting work in.
Yeah.
I focus mainly on fully remote companies, helping them set up systems for managing their remote teams, business development, and marketing. And there's not a lot of questions to ask about that, right?
Yeah,
and that is kind of what I do. Like I do have my own consulting firm. I do contract with different protocols through that consulting firm, and those are the services I offer them. It's just I don't tie the crypto aspect or part
I
of it.
agree. I
Right.
do the same thing.
Andy, what's your usual spiel?
Mine, just like
Yeah.
I work for a media company. Yeah, we do like fintech media stuff like that. Do advertising. Yeah, I just work online. Anyway, Cozy, what are you working on with Premia Blue, with 𝘐𝘯𝘓𝗦𝗡? What are you seeing out there? We're very deeply entrenched in the protocols need to make money, to be sustainable, need to generate revenue, buy back tokens, need to follow Hyperliquid or else you're screwed type vibes. Maybe that's an over exaggeration. What are you working on? How are things going? What's coming? Like, just give us an update.
Yeah, things have been going really well. So we have two main products we're working on right now. 𝘐𝘯𝘓, as you mentioned it. The other one's Archetype. Archetype we made just for fun. It was kind of a hobby project that we decided to do in the downtime during V3 before we started working on it at the end of V2 and then pushed out during V3. And it was really just like we were going ourselves and we were opening up a bunch of tabs to trade on different aggregators to like check prices, check to see if there were tokens there. And I was like, why don't we just like make a platform where you just put them all together? And there are other meta aggregators I think that exist now, like SushiSwap has one and some other ones, but the idea was just have one that is best in class execution, best pricing, and some other cool like bells and whistles. Because some of the features that we were getting asked to build were, why can't we add an option with our swap on V2? Why can't we add, you know, what, and expanding from that, why can't you add perps or anything else? Like, why can't you package it together? So we went down, and smart accounts were kind of like becoming the big buzz at the time. So we're like, okay, why don't we take this idea of a meta aggregator and then add some of these cool features, because we already have Premia. So we can do that thing where we can package an option, and we can, you know, maybe make it more user friendly to the entry level user where options are really confusing. So with Archetype, it kind of has, if you go to the options section of it or protection section, a more V2 like aesthetic. If you remember our V2, it's more of the old kind of DeFi feel where things are more focused on entry level users, and like, I think people that respect their time more than the price, right? Like, not saying that it's not cheap, but just like, you're looking to do things as fast as possible. You're not looking to go to an order book and like scroll through to find the exact option that you want or the perp that you want. You just want the swap and you want to protect it for whatever. So we came up with this thing called price protection, where it was in a single transaction, you can package a put or a call option to protect your spot buy to the upside or downside. So if it goes up, you know, you can make money on it, or if it goes down, if you buy it on the other side, you're able to make some money while still holding your spot asset, and, you know, account for or make up for the loss that occurs in the value of that spot asset you bought. So we have that. And then 𝘗𝘗, which 𝘗𝘗 is, I don't like to say the hyperliquid of anything, right? But we're trying to do for options what hyperliquid did for perps. And 𝘗𝘗 is a low latency, high performant derivatives exchange. We're building on an Arbitrum. The standout features will be portfolio margin, combo trading, and then RFQ system. And it's kind of just like the evolution of 4 years of us building in the option space. Every iteration, we kind of learned something new, as well as got a lot of feedback from different user types on what they wanted and what was missing from our other versions. So we wanted to create kind of a one-stop shop for our users to be able to get an experience on par with traditional centralized exchanges, while still retaining the transparency and security that being on chain offers. So when 𝘗𝘗 launches, we'll launch with options, perps, and then spot will follow shortly after. We'll have our own spot market on 𝘗𝘗.
Beautiful.
And have you seen that there's like I think a problem that you were facing in the past was just like people needing to learn options, and then demand for people wanting to trade. Like, have you found that you've kind of gotten past those two obstacles?
No, I think that well, I think Archetype is going to be for the people that are not sure what options are, right? And they're like, kind of want to dip their feet in, because you don't have to package the option with the spot buy that you're doing, or spot swap. You can just go and say like, I want to buy protection, quote unquote, for my whole portfolio of ETH or Link or something. And you can buy an option, and there's like a really easy to use page that kind of, you can walk through and go through each field and select how you want to do that. And it's like, I think it's going to go down, or I think it's going to go up. And it kind of makes it really easy for you to purchase an option through a different lens. And then with 𝘗𝘗, we're aiming more for the pro tail and institutional traders. One of the biggest issues with options in DeFi before was capital efficiency. If you wanted to buy, you know, a 2 ETH option, you had to put up 2 ETH of collateral, right? And like, that's just not very capital efficient when if you have your KYC, you can go to Deribit, or you can go to OKX or Binance or something, and you can put that on with margin and spend a fraction of it. So with 𝘗𝘗, we're aiming for those users. It will be highly capital efficient. We have an aggressive portfolio margining system, and we're doing all the hedging with perps. So it's going to be much cheaper than, you know, when it comes to hedging than, you know, on some of these other venues where you have to go somewhere else to buy a perp to hedge.
Yep. Cool. Makes sense. Guys, I gotta change gears for you, because we've just got a CFTC SEC joint staff statement just dropped. Project Crypto Sprint.
I think I heard about this.
Key points here is that the president's working group will report strengthening American leadership in digital financial technology. That authorities and agencies will promote regulatory clarity that best keeps blockchain-based innovation within the US. And they are coordinating to issue guidance regarding the listing of leveraged, margined, or financed spot retail commodity transactions on digital assets, which is kind of what we're talking about right now. And it does not prohibit the SEC or CFTC registered exchanges from facilitating trading of these products. They will promote trading venue choice and optionality for market participants within the US, and that they support consideration by each of these respective agencies to facilitate trading in certain spot crypto asset products. I mean, it feels like we won. I mean, look at that.
Babe, I'm like,
I mean, that is
lag
like
right now.
that is like no more VPN.
I
That is
really-
like
I can't-
purpose for everybody.
I'm sorry.
That is like
I'm like,
these aren't securities; these are commodities. Guys, what is your take?
I think it's a huge win. You know, that's been the argument for the last, you could say decade, but even more so over the last like 4 or 5 years is what are these assets classified as, right?
Yeah.
And like, do issuers need to be concerned about who they're issuing to? Do you need to geo-block? Can people from America participate in some of these offerings? I mean, you can probably like short the GDP Apollo right now because like nobody's going to need to get Apollo IDs to participate in any of these ICOs or offshore exchanges anymore. The one question I have for them though, and like I really don't understand is like, why don't they just allow U.S. residents to trade on offshore exchanges? Like just request or require them to do FAFTA reporting. So they have to give over the information of anyone trading, and you wouldn't have people doing all this weird shit to get around it to go and trade wherever they want to trade.
Mm-hmm. I agree. I mean, I think that is a part of it, as a part of this entirety, which people are saying that is bearish for some DeFi protocols, like bearish for Hyperliquid, because a lot of its core use case is kind of allowing US traders to trade with no KYC. Bearish for Premia because same thing. Do you think that's accurate or no?
No, I don't think so, because you have to remember that there are still people that don't want to like they don't want to trade on a system that requires them to deposit into a custodian account. And I think that is one of the like key features of DeFi, that you can trade from your own wallet and that you don't have to deposit to someone else and trust someone else to hold and manage your money. Like you look back to like not just FTX, but that era of all the custodians that blew up. Like I had family that was using some of those some of the other protocols that were the counterparties, right? And they lost all their Bitcoin because they didn't listen and just set up their own wallets. They thought the 3% yield that they were going to get in this, thing that they thought was a wallet was safe, and didn't realize what they were actually doing was depositing into some custodian account, and those people were using their money to do whatever the fuck they wanted with.
Yep.
So I don't think that it's bearish for Hyperliquid, it's bearish for Cayenne or anything like that. I think that people are still going to value on-chain transparency and the ability to trade from like your own thing that you own, right? Like that you control.
Yeah. Guys, that's about all that I got. It's been a good stream. Rob, do you have anything else? Otherwise, we'll let Cozy go, and I think we can wrap. It's been a good call, and it's good to catch up. I'd love to get Marty on with you as well in the future, Cozy, and just do a full markets
for sure, anytime
review.
He's always down.
Yeah.
Sweet.
Well, cool.
Appreciate
man.
you coming on, Cozy. Yeah, it was a pleasure as always talking to an OG like yourself, and then just kind of seeing the lessons learned over the years, all the way coming to a head in the current era. So appreciate you sharing your wisdom.
I appreciate you guys having me, and like really hats off and big ups to you guys. You I don't think get enough public praise, but you're starting to kind of see it, in like your follower count and stuff like that. Like you guys have really grinded and busted your ass over the last handful of years. And it's finally starting to kind of like starting to see some fruits of your labor. So it's really great, seeing you all kind of blow up and grow up, and appreciate you letting me come on the stream.
Yeah, man. Appreciate that, Cozy. Anytime. We'll see you soon.
Yep. Later, guys.
Good
All
man,
right,
Cozy.
Peace.
Yeah.
Well, Rob, that is some pretty big news today on the CFTC SEC joint statement. I mean, the market's bouncing.
Yeah, I think this is still pretty vague.
Yeah, it is.
Obviously, it's bullish. I mean, the whole thing here is deregulation, which is going to allow people to, frankly, just kind of have a more efficient market. It's going to allow more experimentation, and that's something that crypto is best at. And so I think, yeah, opening the gates and deregulating the industry, is we're going to see people get creative. But that's how things take off, and that's how things blow up. Like, this is going to create more volatility. This is going to create a further acceleration of the cycle that we're already seeing play out. And I think it just goes to show that, like, the velocity of the track that we're on is continuing to pick up speed.
Yeah.
So we're not slowing down anytime soon.
Combine forces to clear registered firms trading of spot crypto. It's just
Registered
just
firms
good news.
of spot crypto. I think we're, like, this is, again, paving the way for not just on-chain protocols, where that's something that, you know, is going to have to get sorted out, but it's more so clearing the way for something like a MicroStrategy on the S&P,
Yeah.
like clearing the way for larger capital adoption of crypto spot products like an ETF, like, you know, Bitmine. We're gonna see more and more of traditional firms that have previously been hindered by this regulation. Now this regulation is not there. The largest firms in existence are now available to enter the industry.
Well, guys, thanks for joining in today. Been a pleasure. Speak to you guys tomorrow. Another good stream tomorrow. Based roll-up stream tomorrow. Tons of guests. Will be a good one. Bit more technical. Looking forward to it. Thanks, Rob. Thanks, team. Signing off. Peace out.